Today we are recapping my trading performance in May. I made just over $7,000 from trading small caps in a systematic manner while manually executing, and I'll also touch on my algo trading performance that is in the futures markets. Now, these videos are a bit more off the cuff, so my apologies if I stop and start more than usual, but these are really just taking over my personal view of my performance over that month and to give you a bit of insight into my own trading. These aren't normally the most value packed episodes, but they are really good to recap and see what the kind of monthly life is of being a trader, and also, I guess, algorithmic trading as well. I'm in it, also known as Ghost of Trades on Twitter. I also run Unbiased Trading, where it's a place you can hire quant developers for your own trading. But let's get straight into this. So this is the equity curve from TraderSync. I got a lot of questions of where I journal my trades. I just upload them to TraderSync just because it's kind of easy to put them all there, just to make it an easy way to look over stats and things like that. So this is the equity curve from there. So you can see this month was, to be honest, it's a weird one actually looking at this equity curve. I think because the last 2 weeks I was primarily losing, I felt like this month wasn't a very good month. But yeah, I guess the beginning until like the 16th of May or so was pretty strong. Like I really didn't take much of a drawdown. Really strong kind of beginning to the month. Got to almost 10K in profits this month, and then drawdown for the rest of the month. Recovered a bit of it just yesterday, but apart from that, not that much. So let's get into more of the stats side of things. Now we can see the biggest profit was $3,668. That was an incredible trade. I think it's the most I've ever made on a single trade. We'll come into why that is in a couple of my takeaways in just a second. I had my biggest loss, which was $900, and obviously that's a new biggest loss as well, at least on our perspective. The reason being is I have upped my size. Profit to loss ratio was 2.1. Win rate was 60%. That's pretty standard-ish, so that's kind of fine. 6 total winners, 4 total losers. Max consecutive wins, 5. Now that was pretty much all from the beginning. I kind of did get a feeling, at least at the beginning of the month, I was winning legit every single trade, 5 in a row, and that's quite rare for me for the most part. Most of the time I'm around 3, maybe 4, so 5 was quite rare. Max consecutive losses was 3. Average winners hold time was 6 hours. All that really shows is primarily my systematic strategy for small caps. I'm entering around open, or an hour to an hour and a half after open, and then holding basically until end of day. And unless it does a couple of kind of criteria, such as like crossing over VWAP or hitting my stop, then I'm executing. So you can see average actual losers time is about 36 minutes, which is to be expected. With this kind of strategy, I'm either out quite fast or I'm holding until the end of the day and it's just kind of fading. Next is the takeaways. So sizing up is becoming easier, to be honest. I think if you go back probably like a couple of months, you can hear me complain about being a bit scared of sizing up and things like that. But overall, I've kept on kind of iterating slowly through it. I know my technique is completely abnormal to what is normally recommended, or what people other traders kind of do. They normally do percentage of capital, or they do slowly kind of adding up on in a systematic manner. For me personally, what's worked best is just randomly kind of adding size. Once I start kind of my whole goal of sizing up is to get to around 5,000 risk on every single trade, and I only trade, at least in small caps, once a day on one particular ticker, which is normally the highest probability ticker in my particular strategy. So that's normally based on gap percentage and a couple other factors there. So right now, the size is at $900. Previously, I was risking about $800, so we upped it by about $100 in total. This has just been a really easy way for me to consistently add size. I just have that long-term goal of getting to 1,000, which I guess isn't that long-term. I think maybe in 2 months, maybe even less, I'll be at $1,000 per trade, which will be really cool. And then we'll make the next goals from there. But we're just kind of taking it as it comes at the moment. Then I'm going through an incredibly lucky streak with my futures algos. Let me just show you the performance of that. This performance was extracted all from my NinjaTrader brokerage and a couple other brokerages, put it into Excel, where I combine all the trades into one kind of like pivot table, and then that pivot table creates this graph. Just a really nice, easy way of doing it. I plan to build something in NinjaTrader to do that, but at least for now, hopefully this covers it and you get a general idea. So this was from 6 algos running all at once. Most of them were taking about a trade a day, I think, in May. But it wasn't always the case. On some more volatile days, I think the highest amount of trades I had in one day was about 12, which was very high for me. So yeah, normally it's about one trade per algo per day. So we can see it did a 20, I think it was like 23.57% return on capital, which is pretty insane, to be honest. I really can't be saying that is typical or normal, or really anything, to be honest. Obviously, now a big reason of that percentage on capital is because leverage in futures, you can apply mass amounts of leverage. And obviously, I'm taking use of that. So keep that in mind, please. Like, it's not on, if this was on $1 billion of capital, this would not be this percentage. This would be incredibly lower because there would be more constraints on volume, on liquidity and things like that. So just keep that in mind. That's not really compounding to where you could think, oh, if he could achieve 23.57%, he could do that on a billion, and you should open a fund. It's not exactly that one way to doing that. But at least for the current strategies, this is still incredible performance. And yeah, bit lost for words, at least the performance at the moment of that. So I'm just gonna waiting for that drawdown month. I know it's gonna come at some point, so I'm just getting mentally prepared for that. I don't want to be overconfident based on these kind of performance metrics. And that's kind of my core issue, and was always my core issue, is becoming overconfident in a way where I think, oh, I can double size now, or oh my god, I'm just creating amazing strategy after amazing strategy. That definitely normally isn't the case. Once I start feeling like that, as I think Paul Tudor says, it's normally when you're dead as a trader. So yeah, just making sure I have everything in place mentally to understand that maybe next month, maybe the month after, I have a drawdown month that could be decently severe. According to my portfolio, kind of like backtest of all the algos, I could probably get into about a 15 to 20% drawdown if it was like worst case. Obviously, necessarily it could go even further than that, but I think worst case that's around the percentage based on Monte Carlos and things like that. So we'll see how it goes. Next, now I have actually a trader coming to stay with me for a month. Now this is actually necessarily, it's not just some random trader or anything like that. He's a personal friend. I work with him. We do some work with Unbiased Trading together. He's been just incredibly talented, and he is one of the best kind of coders I probably know in the space on using machine learning and things like that. So he's incredibly talented, and I'm incredibly lucky for him to come over. And we're just going to basically be trading for a month, working on Unbiased Trading projects together, doing different things as well, just in the trading world, I guess. So we're going to be learning a lot from each other and seeing how that goes. First time I've ever had a trader come and stay with me. I have visited or talked with other traders before, but this is going to be definitely a bit different. So this is going to be a really interesting thing. And also, he works on Ask Edgar with me, so he's also incredibly talented just on a general software engineer side of things. So that's going to be incredibly fun to do. Next, I'm just learning from more and more people, to be honest. Recently, I've been learning more from Pedma. This is a really simple example, so this is just one that came to mind because I think I asked him like 2 days ago. I wanted to allocate some of my savings, kind of like capital that I'm not really using. I just had it in a high interest savings account. I was wanting to put more risk on it, and I was asking his opinion on should I put it in BTC or any of these kind of other cryptos. Now, look, obviously I'm a trader, but as traders, we all want to put risk on the table, and yeah, I was incredibly naive of drawdown percentages on BTC and things like that. Obviously, I haven't really personally deployed crypto algos. I've worked with traders on crypto and doing analysis and things like that, but personally, it's definitely not my strong suit in the sense of knowing the crypto market. So things like that, just being able to ask someone a really simple question that could be incredibly dumb and being told, "Yep, that's probably not a great idea." It's just really it's a great thing to have. So definitely building your network and being able to ask those kind of people is just great, where they have experience where you don't, or I think more and more now, especially as I'm working with better and better developers, uh, a lot of people are just better than you, and you kind of have to get used to that, and you have to be ready to learn from those kind of people and get better yourself. And that's kind of the way I want it. I want to be able to learn from people that are better than me, and then obviously as well, like I put out all the content I do on Twitter and YouTube and things like that to hopefully help other people surpass me and get to even further heights than me. So it's really just to give back. Everything I've learned has mainly been from other traders, other people, through Twitter, online resources, things like that. And I just want to keep on doing that until I can build something even bigger than myself. Now, this last point was actually a takeaway from a recent call I had with a trader. He's trying to get into algorithmic trading, and he's trying to get into large caps and futures for that reason. Algorithmic trading on small cap worlds is a bit more difficult to fully accomplish. While we have accomplished it multiple times in unbiased trading, it's there's a lot more factors that go into it. You have slippage, locates, things like that. So it's definitely a lot more volatile when you're trying to, if you're trying to create a more more stable, for lack of better terms, portfolio of strategies. Definitely large caps and futures is kind of where that's at least from our experience. And he touched on a really key point, and I wanted to bring up here was that when you go into new markets, you are basically starting from the beginning. And I think if you don't have that frame, you're going to have a lot of hard lessons that are going to cost you a decent amount of money. And that definitely happened to me when I first moved into futures. Obviously, I started to see some success in small caps, and I was like, oh, okay, this will be easy. I can apply the same learnings I've got from small caps into futures, and this is just completely not true. The one I vividly remember is understanding volume in futures. Now, this is not to say I've like uncovered the true meaning or way you do volume in futures, but there is one key difference, at least I spotted, which was volume in small caps is normally associated with volatility. The more volume, you normally have the more volatility. In futures, it's kind of the inverse. Less volume normally means more illiquid, which means more volatility, and more volume doesn't. And more volume normally means a thicker bid, which means normally less volatility. Now, that isn't in all cases, but that's in definitely some cases when you're not reacting to like news or things like that. So even just that key thing, I try to create so many volume strategies on the idea that, okay, well, like we're going to look for increasing volume in futures and that's going to increase volatility and things like that. None of them ever worked. And, I was too hasty to jump in to futures and kind of had to pay for those lessons instead of just learning them from someone else or something like that. So just keep in mind, anytime you work into new markets or new things like that, pretend that you're starting from the beginning, because in reality you kind of are. And if you do have any, previous knowledge from other markets, then yeah, try and employ them, but just don't take the assumption that it's 100% applicable to this market. So that was just one really small point, and I think it could really help a lot of people. At least it would have helped me save a couple thousand when I was getting into futures. Thank you for watching, and if you enjoyed, please like and share it with anyone else who might be interested.